Hi students. In the previous video, we discussed about the introduction of Companies Act, definitions of Companies Act, applicability of Companies Act, right? And also features of Companies Act. In this video, we are going to discuss corporate weal. What is corporate weal? When we are discussing about artificial legal person, artificial legal entity, or separate legal entity, we discussed that the moment company got incorporated, it will be clothed with legal identity. So the cloth, what we are talking about, the wheel, which we are talking about, the curtain, corporate curtain, what we are talking about, is nothing but corporate wheel. So the moment company got incorporated, it will be treated as a separate legal entity. It will separate the owners. It will separate from the owners. The one who own the shares, the one who contributed share capital is different from the artificial person, which is the company. So that is the difference. So anything and everything which is done by company is liable, but not the owners, but not the shareholders. That is the reason the liability of shareholders is limited to the extent of what they have contributed to the company. It will not, the liability of the company will not be extended to liability of owners. It will not be affected to their personal property, right? We, in other terms, we can also say that it is corporate insulation. So they are insulated from the damage which is caused by company. So all this is said and explained, provided they act in good faith. The directors, the owners, the key managerial person who are running the corporate, who are running the company, are doing the business or taking the actions in good faith. Let us say there is some malified intention. There is some fraudulent activity which is done by these people who are running the affairs of the company, then law will pierce the veil. Law will open the curtain. Law will lift the curtain. Law will lift the corporate veil and identify the people who have malified intention, who are misusing the benefit of artificial legal person, and necessary judgment will be passed. So in this corporate veil, there are certain cases where the corporate veil will be lifted. Let us see those cases. The first case is trading with enemy. So if a company is trading with an enemy, then let us say there is a company whose owners are enemies, then the corporate will be lifted. We will understand with the case laws in a moment, in a minute. Next, we have to avoid or circumvent tax. Let us say they incorporated a company or they are running a company just to avoid tax, just to evade tax, to avoid a legal obligation. So there is a legal obligation which is imposed on person. So he created a company just to avoid that legal obligation. Formation of subsidiaries or agents act as an agents. Then fraud or improper conduct or defeat law. So these are the 5 cases in general where corporate veil is lifted. So for explaining each of these, we will also see the previous case laws where corporate wheel was lifted, corporate curtain was lifted. So trading with enemy to evade or circumvent tax, to avoid legal obligation, formation of subsidiaries to act as agents, fraud or improper conduct, or to defeat law. So what are those cases? So let us discuss about trading with enemy. So first case law is Daimler Company Limited versus Continental Tire and Rubber Company. So these are the companies which are incorporated in UK. So this is the case law which is pertaining to the times where the World War was going on. And we know that World War is mainly between two countries, between UK and Germany. So these two companies which are incorporated in UK, Daimler company as well as Continental Tire and Rubber company, both are incorporated in UK. However, the Daimler company is the owners of Daimler company is UK based, whereas the Continental Tire and Rubber company owners are mostly German, and the company actions or the company operations are run by the directors who are also mostly German. So in this case, Daimler contention is, as we are dealing with German companies, we should not continue the contracts. We should not make payments to Continental Tire and Rubber company. So the corporate wheel was lifted, although the company Continental Tire and Rubber Company is UK listed company, UK company. The owners, the people behind this company who are running the operations, who are the major shareholders, are Germans, and Germans are enemy country citizens. During World War One, the corporate wheel is lifted. So the Continental Tire and Rubber Company wheel is lifted, and they saw that this is run by German companies. Hence, we should not, Daimler should not trade, or Daimler should not make any payments to Continental Tire and Rubber Company. In this case, the court has given judgment in favor of Daimler Company Limited. This is with regard to trading with enemy. Here, the wheel was lifted and the shell was broken. So there is no more company now. It was seen who are the owners, who are the members, who are the directors of this company, to know the nature of the people with whom the company is dealing with. Next, we have Berendsen Limited versus Commission of Inland Revenue. In this case, a company was incorporated, which is Berendsen Limited in New Zealand by medical professionals to avoid tax, to evade tax. So they used to increase the salaries of medical professionals through the company name, and they used to evade the tax. Here also, the Berendsen Limited, the wheel was lifted, and the inland revenue, there the income tax commissioner used to demand more tax or demand adequate tax for the income earned by Berendsen to for by disallowing the salary expenses. Next, Juggilal versus Commission of Income Tax AIR. So in this case, so the case is to tax whether the income from selling shares, whether to treat it as capital gain or treat it as business income. So the Juggilal has created a company, and this company, the taxes were paid as capital gains. However, the actual transactions, if we see, it is more like a trading business. It is more like an investment company where the shares are dealing on day-to-day basis and they are doing purchase and sale, not like an investment. Hence, in this case also, the Commission of Income Tax got the merits, and they taxed it as business income, not as capital gains. The rate on capital gains is lesser when compared to the rate of tax on business income. So clear cut case where the company was incorporated to reduce their taxes, evade their taxes. Then Dinshaw, Maneckjee, Petit. So in this case law, this person, the DMP, created 4 legal entities, and the purpose of creating these 4 legal entities is to distribute the shares of DMP, to collect the dividends from those shares, and it will be passed on to DMP whenever necessary in the form of interest of taking loans. So this is also to avoid the super taxes, to avoid the surcharges. So when surcharge will be applicable, let us say you have income more than a particular limit. Let us say your income is more than 1 crore, your income is more than 10 crores. Surcharge will be applicable on higher incomes, not on basic exemption limit, but on higher incomes. So what DMP has done, he divided his entire net worth into 4 different portfolios by creating 4 different companies and collecting the dividends. And he used to take that money whenever necessary in the form of interest from those companies. So when we look into those companies are shell companies. They does not have any other business other than holding these shares and paying interest to this DMP. Hence, they lifted the corporate wheel and finally they have made him pay the super taxes or surcharges. These are the 3 case laws which talks about evading or circumventing tax, evading or reducing or circumvent tax. So all these 3 cases where the income tax professionals, income tax commissioners won the cases by lifting the corporate wheel. So any person cannot create a company just to evade the taxes. If you do that, eventually the wheel will be lifted and you will be paid more tax. Then next we have is formation of subsidiaries to act as an agents. So Merchandise Transport Limited versus British Transport Commission. In this case law, the Merchandise Transport Limited was denied for providing license. So British Transport Commission, they denied the license for MTL, but they want to continue the business. So what they have done, they incorporated a company which acts as a subsidiary for this company, and subsidiary company has applied for license. So British Transport Company lifted the corporate wheel of the subsidiary company and saw that the company which was created newly for applying license is none other than the MTL, for whom the license was denied. Hence, the license was also denied for the subsidiary company, although it is a separate legal entity. They lifted the corporate wheel and they saw this MTL is the one who is applying by way of disguise. In disguise, okay, they created a company and they have applied for license, which eventually got cancelled. So in this case also, BTC, British Transport Commission, has the merits and they won the case. Next, to avoid a legal obligation. So in this case, the workmen employed in associated rubber industries versus the associated workers. So the workers versus the company, the labor versus the company. So what happened in this case? The ARIL, the Associated Rubber Industry Limited, they are earning good amount of income by doing business, also by way of collecting dividends from their investments. So the ARIL, what they have done, they have shifted this investment to their wholly owned subsidiaries, Now, previously, based on the income, they used to pay bonuses to employees. By transferring their investments, the dividend was also transferred to that company, and hence the bonuses was reduced from 16% to 4%. So workers went to court, workers approached court, and they explained about this. And finally, the ARIL have to pay the bonus to them because the subsidiary company, the wholly subsidiary company, is just a shell company. It is only holding the shares for the purpose of obtaining dividends. So the court has given the order in favor of workmen, in the favor of labor, to get their bonuses by including the profit, by including the dividend of its subsidiary company as well. So what we have learned in separate legal entity, the income of one entity or the income of the entity cannot be the income of the owners. However, in this case, they lifted the corporate wheel and they include the income of the subsidiary in the holding company, and they forced this company to pay the adequate bonus to their employees. That is with regard to case law number 6. Last case law is with regard to Gilford Motor versus Horne. So the Horne is MD in Gilford Motor Limited, Gilford Motor Company for some years. Thereafter, he resigned as MD, and the condition while he resigning from Gilford Motor is he should not continue the business which he was doing in Gilford Motor for certain number of years. But what Horne did intelligently, he created a company, and the owner of this company is his wife, but he was doing entire operations and he was soliciting the clients of Gilford Motor. He was running the same business, which is violating the conditions of the agreement made between Gilford Motor and Horne. Horne was telling that it was not him, it was the separate legal entity. When you open the corporate wheel, then you see there is Horne's wife who is the owner, and the operations run by Horne himself, which is violating the terms of the agreement between Gilford Motor and Horne. So the corporate wheel is lifted, and the businesses which carried out by Horne, injunction was given, stay notice was given. So Horne is no more continue to do the business which he is going to do with his wife's company. So he should stop the business for a time period which was agreed between Gilford Motor and Horne. So all these cases, it proves that if a person does the operations, if the owner, if the director behind the company does the operations in good faith, then you will get the benefits, you will get the features of the company, which is separate legal entity, limited liability, perpetual succession, etc. Whereas if the people, the owners, the members, the directors, the key manager persons behind the company act act with malified intention, fraudulent intention, then the corporate wheel will be lifted and necessary action will be taken in the respective cases. That is what we have observed in corporate wheel. So in the next video, we are going to cover the classification of companies based on liability, based on members, based on capital, other companies, etc.